Welcome to Business Live Extra, the show that focuses on business leaders and entrepreneurs. COVID-19 has changed a lot of things, causing individuals to begin to worry about their investments. In this week's episode, we're talking to leading light in Jamaican corporate finance. A man they call the wealth creator. He's a chief executive officer, CEO, and sits on the boards of multiple successful companies. He has over 20 years of corporate financial experience in the Jamaican financial industry. He holds an MBA from the Florida International University, and he was named the top CEO in Jamaica for financial year 2015. Have you guessed it yet? Our guest today is Mr. Gary Peart, CEO of Mayberry Investments Limited. Gary, welcome to Business Live Extra.
Thank you.
It's great to have you. Gary, you are known as the IPO king, not just the wealth creator.
It's a lot of names.
Yeah. So how you got the name IPO king now?
I did not know I had a name called IPO King. I thought my name was Gary. But I suspect they refer to the fact that Mayberry, I think up to this point, has listed the most companies on the Jamaica Stock Exchange and the Jamaica Junior Stock Exchange.
And what was the first IPO that you did at Mayberry?
Well, for me, it would have been Access Financial Services, which was the first company to be listed on the Junior Stock Exchange. I'd worked on several other transactions beforehand, and I was at First Global. So I think it was a rights issue for hardware and lumber at the time.
Okay.
So I've had a lot of experience with the equities and the fixed income markets, etc.
And how did Access go on to do, as an IPO?
Access has done very well. We were an investor in Access. We sold out at $9, and it traded up to about 40 or 50, but subsequently it seems to be headed back to $9. So might have been a good sale at the time.
Sale. Any IPOs or any deals really jump out to you that are kind of your signature or like a favorite transaction for whatever reason?
I love all of them, and it's one of the things I use to motivate my staff, in the sense that we have done a lot of transactions, but for the customer, it's usually the first time. So we always try to treat each transaction as the first time that we're doing a transaction. So it's the first time for the 25th time or for the 35th time,
right,
whatever it wants to be. But I guess in everything, there's always something that stands out. And I think for myself at Mayberry, it was the fight we had for the junior market. We were very integral, myself, Chris, other members of Mayberry, in getting the junior market going. Mm-hmm. So much so, I think the first 4 or 5 listings on the junior market were arranged by Mayberry. And initially when we started, there were several people in the marketplace who had an issue because they didn't fully understand the junior market. I think the junior market, it had gone through many different things. It had survived a lot of rumors and stories that weren't so, especially, for example, with LASCO. Notwithstanding you do a 300-page prospectus that says that you combine 8 companies into one, mm-hmm. Some people said, we split LASCO into 3,
Right.
But as I said, that journey was a pretty good journey. We came very close to losing the junior market. Mm-hmm. Where even at the board at the JSC, we had to fight for it. And we got to a point where we lost, so as you know, the first 5 years is 100% tax remission, and the next 5, it's 50%. So we actually got to a point where we lost years 6 to 10, mm-hmm. and then we were able to come full circle where we got back years 6 to 10. Mm-hmm. And it has done very, very well. It has exceeded everybody's expectation. It exceeded all the naysayers who were saying all sorts of things about it. And I think the majority of companies, probably in excess of 90% of the companies that have listed on the Junior Stock Exchange, have done extremely well. And for that, we're very happy about.
Yeah. And, for your size at Mayberry, and yourself, do you view yourself as, say, Jamaica's #1 investment banker, investment bank, maybe on a per capita basis, or just...
Well, whatever basis you put it on, I think we're #1 in mm-hmm. the sense that we started to do a lot of things way ahead of their time. So I think the IMF in and around 2005 indicated that security dealers should limit their repo book. Yes. And when Mayberry went public, they went public with the understanding that they were going to reduce the size of their repo book and keep on the IMF agreement and move towards asset management and off-balance sheet type structures. in that preceding time, most of my competitors did the opposite and continued to increase it. But as I said, at Mayberry, we tend to do things as ahead of the time. And so we've lived to see what is happening now, where collective investment schemes and off-balance sheet schemes are the way to go. And there's a key ratio in the security dealer business, which is called the core dealer ratio, which simply means that you earn a majority of your income from non-interest earning business.
And why do you view those as being key now, like unit trusts, you know, CISs?
Well, I'm thinking about two different things. So core dealer has to do with your P&L and your balance sheet for the security dealer. So what that means is that most of your earnings come from fee income generating activities. And so when you do the breakout of what generates those fees, etc., that's where your point now about unit trusts, collective investment schemes come into play.
And is that just still the interest rates at the central bank at 0.5% are just still very low to be able to get some interest income into the business?
Well, actually, no. The focus is not really on the return. The focus really is about the risk. So what had happened is, I mean, in their wisdom, the Bank of Jamaica, the FSC, you know, encouraged security dealers to move to off-balance sheet, ultimately to take the financial risk of the interest rate spread game off their balance sheet. So what has happened is that you have created a level of sophistication amongst the investors so they understand what they're investing in. So whether it's a BOJ type CD, which is based on your 0.5%, or as rates have come down, you know, they take a decision and they invest in that. The financial volatility of that belongs to the customer. It doesn't belong to you, the dealer, because that's what you are. You deal, you buy and sell. And then you earn the fee in between.
And how has, you know, it's pretty clear, Mayberry and you've always stayed ahead of the curve. You know, junior market early, you know, bought some associate stakes, you know, early, you know, given interest rates trending lower and, you know, seeing a lot of competitors try to come into the market and get into PE now. But you've always stayed well ahead of the curve, you know, many examples. What's the secret sauce there? I mean, is it you and an investment committee, or, you know, how have you always kind of stayed a year, maybe even 2 years ahead of the competitors?
I think we have a very good risk analytics structure platform. I mean, headed by our executive chairman, Chris Berry. So, you know, whether you want to call it Three Musketeers, a Troika, whatever you want to call it. I mean, myself, Chris, and Mark as the executive chairman, vice chairman. We spend a lot of time looking at risk mitigation strategies whilst creating profits. And one of the areas that we have, there's a term that I use, we are conservatively aggressive. So we will try and analyze and find something that has this lowest risk, but that can give you the greatest profit potential. You know, and I think, and for us, once those parameters line up, we go aggressively into it.
And you find, you know, you've been at Mayberry now 15 years. You joined in 2005.
Yes.
The chemistry has always been there, or has it just gotten stronger and stronger as time has gone on?
Obviously, with people, I mean, Chris and Mark are brothers. I came in as a professional and to run the business, but we have common principles, and I think the biggest success for Mayberry is our tagline is transforming lives positively through lasting relationships.
And what does that mean?
What that means is that relationship is everything. So what people don't realize is that, for example, Mark and his wife Jenny have been married in excess of 20 odd years. Chris and Pat has been in excess of, they're approaching 30 years. And so we're all into relationships for the long term. You know, so when we talk about transforming lives positively, a lot of this information that we've garnered and learned, we have been passing on to other people with the hope that when they learn it and learn these wealth-creating opportunities, it will change their lives in a positive way.
So it really transcends down to the clients,
it goes right
value system.
Right, it goes to the clients. Because for us, one of the best things for us, and certainly for myself, is to see the look on the face of a customer who opens their statement and realize that they've achieved financial independence. It is a look that you can't bottle it, right? It is the most amazing thing, and it gives the level of satisfaction that it gives, because everybody works hard for their money, whether it's $10, whether it's $100 million. They work very hard. They all have different levels of expenses. And we all want to get to a point that regardless of the environment, you know that anything, health woes, whatever woes, you know you can draw a check. And you're able to deal with it.
And you know, everybody sometimes scrambles, tries to find their passion in life. You know,
Yes.
how did Gary get passionate about finance?
Oh, Jesus Christ. That was a challenge. I think one of the challenges for me is that I've always been able to do everything. And I think they say that you're a jack of all trades, a master of none.
Yeah.
And so I've always wanted a challenge, but every time you lost a challenge in something, you'd move on to something else. You never really settle down. And, you know, as I tell the story, I was a university dropout, you know, because I could never focus at university because the challenge was, you know, to drop more six loaves than you got in dominoes.
And was it you found university a bit kind of boring, or
no? On the contrary, university was a blast. I played football, but at the time, UA did not have a semester system. So you went to class, or you registered in September, and you had 3 exams the following May, I believe it was, and you didn't have to go to school. So you're coming out of a structured environment like a Campion where you have 6 or 7 classes a day, your teacher knows you need to be there. And you go to university, and whether you're in the class or you're not in the class, nobody's there. You're supposed to have a level of maturity that you will incrementally study and get to understand. But of course, you're going to try and cram and you're going to wait till the last minute. And invariably, you get to a point where it's the day before the exam and you're just like, oh, Jesus, you don't even know what the first book looks like.
Yeah.
You know? So you went through that, you just weren't ready for it. I mean, now with the semester, it kind of forces you to do something, you know, much quicker. But that level of freedom, I mean, definitely wasn't for me.
For you.
And it was very enjoyable.
But
I mean,
there's many great success stories that, you know, have taken that route.
Well, and I think that's what turned it around for me. I mean, I had to go through a period of time where I was like, oh my God, I've, you know, thrown this all away. I was like 27 before I went back to university. But what happened is that I went to a friend's house, and one of her friends was talking about his period as well. And he was flying all over the world, and he got up one day and he's like, hey, you need to make some money, so he has to go back to school. And he said he went back to school at 29, and I'm like, I'm 27, so it's not that bad.
Why can't you do it too?
Why can't I do it, you know? And I did. And it kind of coincided at the time.
And that was your executive MBA part?
No. That was, I didn't have a degree.
Oh, that was finishing your bachelor's?
Yeah, I don't have a degree. I dropped out of university with a bachelor's. So
okay.
In fooling yourself, you then go through a whole series of jobs because you just don't know what you're doing. And, you know, so it so happened that I was a teller at CIBC on King Street. And I had a friend, and I got an interview at Capital and Credit, and I got a job.
You're really making your relationships, back to your point of relationships in the financial sector, the market, everything.
Yeah, so you look on and I'll never forget it. I mean, well, your role is to call people and get money and hit the targets. So I'm like, okay. And I'm like, like who? And he just gave me a directory.
Yeah.
And said, boy, just go through that and call some people.
And you started seeing the money.
I'm like, I started seeing what? I'm like, this guy don't want me here. I mean, that's it. You just get that directory, right? And then you're given a target that's like $1 billion, whatever the figure was. And I'm like, this definitely is not going to work out.
We're going to come right back to that, Gary. I like it. And we take our first break on Business Live Extra. We're talking to Gary Peart, CEO of Mayberry Investments. We'll hear all about the company when we return. Welcome back to Business Live Extra. We're talking to Gary Peart, CEO of Mayberry Investments. It's a full-service financial services business, the leading broker-dealer in the local marketplace as a standalone, fully Jamaican entity. The Mayberry team has bought the greatest number of listings on the JSE among local brokers. Its biggest asset is its relationship building and management. Mayberry has brokered various private and public debt transactions. It acted as lead broker for the first debt issue to be listed on the Jamaica Stock Exchange JSE bond market. Let's hear more from Gary Peart now, CEO of Mayberry Investments. Gary, welcome back.
Thank you.
So I want to get back to that target. You know, you're mentioning, you know, at Capital and Credit those days, it was $1 billion for the month or the year.
That was for the year. I mean, it was. So long and short of the story, right? I mean, I actually took up the damn directory and got some legal size.
So just cold calling. You're just.
Yeah, I don't know nobody. And I think when I did the thing from A to like Z, it was like about, if memory serves me correct, it was about 12 legal size papers. Each name was about this. It was close to like 500, 600, almost 1,000 different names of companies.
Okay.
And I'll never forget the first person that said yes. I mean, it was crazy. I was just calling. I was like, you know, you give me some money? You know, these are not like companies, they're individuals and stuff. But long and short of it, I think because you have a drive to win, that's one of the things Campion instills in you, you need to win. And I have never, to this day, I have never been able to exhaust that list. And by the time I got to 75% of the way on the list, which was in about 2 or 3 weeks, I got the number, you know. And
you got to the target?
Yeah.
The target overall, yeah.
Yeah.
And so you found in those days, was it kind of rougher on financial advisors by management, or do you think, or is it now a bit rougher, you think?
The thing about it was that back then, it was just before the financial collapse. So one of the things that happened is that, you know, Cap and Cred was structured and they made most of their money from arbitrage. You'd borrow US dollars at 12%, you'd convert it because the dollar was stable, and then you'd invest it and earn like between 40 and 60% on government of Jamaica stuff. It sounds simple now, but to have made that bet because the dollar was revaluing and stable was a huge bet. And they made money. So what tended to happen is that people were trying to find institutions at the time that didn't have a large loan book. And that's when government of Jamaica Securities started to get more popular. JMB was pushing that side of the market with Joan Duncan and to a lesser extent Donna when she came in. And so the market switched. So companies like a Cap and Cred, a Mayberry, etc. at the time started now to benefit from that because they were in that marketplace. And so it just grew. It grew from there. We went through this. So in the middle of the collapse of the financial sector, entities like a Cap and Cred, a JMB, a Mayberry that was known to be dealing in GOJ securities benefited significantly.
During
so you started to get funds even before you were calling. You know, and so this part of the story not many people know because, you know, they traditionally look on because the local market collapsed and stuff. But you had a cadre of local security dealers and merchant banks that did extremely well in that time. And one of them was Capital and Credit.
The clients were just coming into you at that point.
Clients were just coming because they were just going from other people. And so by then, I'll never forget it. I mean, when I started, I think they started in 1994. I started in 95. So it was pretty early with them. And literally, I saw that business move from all of the liabilities of the bank was on a legal size spreadsheet, legal size paper that had four entities. Yeah. Two entities with 4 maturities.
Right.
That was the entire liability base of the institution. And I watched that grow from that spreadsheet grow from those 2 to the point where I kept reducing the font to try and keep everything on one page. So it became pages and it just mushroomed and just did well.
So it just flew. And what happened after Capital and Credit? Where you moved after that?
After Capital and Credit, I went to George and Brand at the time. Wayne Ray was the managing director.
Okay.
And so coming out of Capital...
Were you still in sales or you moved into
I was actually in treasury and I was sales at the time because this thing was so small. As it grew, you filled in
wherever needed
and advisors and stuff. So you trade foreign exchange, you trade bonds, you do everything, right? So you started to grow in that way. But then I didn't have a degree. So a part of the story is that, you know...
So you couldn't become CEO yet there?
CEO, I couldn't become a manager.
A manager? So it was that kind of strong and... or rigid at that point?
Well, yes and no, because we're doing very well. And then you got to the point where you started now to understand the importance of having the degree. And I think one day what had happened, one of these firms.
Was that kind of what sent you back to university?
No, I didn't get to that yet. I mean, I think what happened was that I was just working. I just loved working. I'd get to work at 6 and I would leave at 8, primarily because...
In those days, you were earning commissions now as well? You started to get some?
No, and that's what I'm trying to tell you in the story. I was just on a fixed salary working.
Yeah.
I didn't know what was happening because I just work. I just happened to be working, right? And then one day a guy called and he's like, hey, your commission at the end of the month should just be phenomenal. I'm like, commission? What are you talking about? Because I was kicking ass. We were making some crazy money, but I never knew. And then one Friday, never forgot it. I think it was either PwC or KPMG, put this thing in the financial paper about the salaries.
Like a salary scale in Jamaica?
Salary scale of all the different things. And they actually had my thing, treasury officer. And my salary was below the minimum. And I'm like, what? And I think it's the first time I ever got a little angry. And I went in and, I was like, this can't work. And the following day, I got a promotion, I get a company car. Listen, I don't think I've recovered because up to that point in time, I used to eat Peart stuff because, you have a light bill and you have this and you buy wholesale and that. Oh, Jesus Christ. I think it was a 100% salary increase and company car. I used to walk back to and from work and think, Jesus. From then, I think this is why I put on so much weight because I never bought anything food for about 5 years.
And is that what really got the trading now, just instinct and your whole bullishness, Gary, like from that day?
Yeah, I was aggressive. I was hard.
Was that your first big commission, like first big deal check in a way?
In a sense, yes, salary increase. Because I've never asked for a salary increase. In my entire life, I've never asked for a salary increase. It has always come because of the work.
You find yourself always thinking back to that day when you do another deal and another deal,
No,
or you just moved on from
I
that?
I don't have regrets. I try not to have regrets because I think everything is ordained and everything happens for a reason. And, so I don't get caught up in remorse, boy, it could have been different. There are times you feel like you should, but every time I think about that, I realize there's something along the way that if it didn't happen that way, I would miss out on it.
Right.
So we blew through that, and I think that culture really was numbers driven. So when I went to George and Brandy, you met somebody like Wayne who was no more into people and how people are thinking. And I thought he was one crazy fellow. And I'm like, dude, let's talk about doubling the profit, right? Because I went because they tied my compensation to budget. So the commission thing now.
Yeah.
So I'm ready to lick the ball out of the park because I will make a ton load of money and thing.
So you're pushing the team now.
You're ready to do all of that and thing, and Wayne is like, people and this and that.
So how did you get headhunted for Mayberry, or was it just, you were, as you said, you were hitting these numbers at the park, building your personal brand?
Well, I think what happened is that George and Brandy morphed into First Global Financial Services, and which broadened again, and we're in a corporate finance, and he started to just do deals. So we got to a point where within...
Because you had started to do some investment banking deals, no longer just treasury.
Correct. And I think that's where I started to broaden my expertise away from just treasury, which was just bonds and foreign exchange.
And you became on Chris's scope or radar and Mayberry.
we did an equity transaction. And at the time, getting an equity transaction was a big thing. Because there were very few companies outside of Mayberry, probably Peart,
who understood it or just were doing it?
It's not a matter of understanding it to get it, because equity wasn't a big thing at the time. A company would really have to be in a bad way for them to do a rights issue or something like that, And they'd invariably go to Mayberry And so when we did the hardware and lumber, I remember even trying to convince Don Webby about that, because he's like, you sure you can do this? And I'm like, yeah, man, we can get it done. And we started doing a nice, aggressive team at the time, Jason Craig Watson, Nick. I mean, we were really doing well.
Yeah.
You know, and it just broadened the whole horizons. And we were doing deals all over the place. We started doing commercial paper, which wasn't being done at the time, and we were just up and down. I was young and just doing our thing. And then Chris came into the mix.
And you know, when I always say two, you know, you look at Wisinko, you know, you have William and Andrew. I mean, do you really feel, you know, Mayberry, which has just gone from strength to strength, you know, since going public or 05?
Right.
You think that's a Chris and you story?
Yes and no. I mean, I believe Mayberry is our true family. I think at the end of the day, because of Chris's personality and how outgoing he is, it's easy for people to hold on to him. I think to a certain degree, I have a personality that, you know, people have been able to see. But Mark has been is the rock that holds us together. And we have a pretty good C-suite. I mean, Tanya Waldron, Gooden, now Andrea Whitaker. So we work pretty well together, you know, and for us, the things that are challenging for Mayberry are the things that are easy for others, you know. So innovation, I mean, everybody on the team is always comes up with new and different ideas. That's not our problem, which is most of our competition's problem. Our problem is, you know, we might get some simple things and take too long to do them, you know, which we can change pretty easily, you know. But it is truly a family. It is truly a team. People know the psyche of each and everybody, and we work very well. So what it has done is that most of my competition work in sequence. I work in parallel. So I have a team that we go along parallel work tracks, and when we get to the end, we just compare, and it fits in, and we're finished. So it allows us to do everything. When
you say that, you just mean you can move faster? Or you
extremely faster.
Okay, yeah. Especially when you're working on a deal or a transaction.
Yes.
And so forth.
Instead of having, why I say sequentially, so instead of somebody legal doing X and operations doing Y, they both do it because we know what the outcome is going to be, and there's a certain level of trust as to what that outcome is going to be. So when it comes...
So when you have a kickoff meeting, just everybody's clear on what they got to do.
Correct.
And then you just want to get to that end date together.
Correct. So along the way, you have less control points to make sure that they're doing the right thing because you know you've trained them to do the right thing. So we all end up, so something that takes my competitor 3 weeks, we will do it in 3 or 4 days, you know. And it works well, especially with the customer.
Yeah. And we take another break on Business Live Extra. We're talking to Gary Peart, the man they call the wealth creator. More when we return. Welcome back to Business Live Extra. We're talking to Mr. Gary Peart, CEO of Mayberry Investments, a leading local brokerage. 2020 is a difficult year as a COVID-19 pandemic creates a financial crisis unlike anything we've seen before. Let's take a look at the company's recent performance. Total assets grew to $151 million US for the year ended December 31st, 2019. That's compared to US $119 million for the comparative 2018 period. Income for 2019 was $33.6 million US dollars compared to $28.5 million US dollars for 2018. Mayberry had several listings in the pipeline for 2020 before the island's first coronavirus case was announced in March. These are all on hold. Let's hear more about the advice Gary Peart is giving his clients in this unprecedented time. Gary, welcome back.
Thank you.
You know, Mayberry, a lot of your competitors would say, you know, sometimes in the marketplace that Mayberry is aggressive.
Yes.
But the reality is, you know, like what you're just saying, you're on the right side almost 90, maybe even 100% of the time.
Yes.
You know, well, a lot of your competitors make mistakes. Maybe they're just not there. You know, how do you answer that? You know, how do you address it?
Well, unlike a lot of our competition, we're basically a company that has 3 major shareholders. I mean, Chris and Mark, and to a lesser degree myself. So we don't have a multinational corporation. We don't have US dollar billionaires, etc., behind us. So it's not a case where you can just willy-nilly go out there and take certain positions and absorb losses. So we've always been cognizant of that. And that in a way bleeds into our risk analysis and our risk adverse nature. But notwithstanding protecting the golden goose, which is the capital of the business, it doesn't prevent us from, when we see an opportunity, that we don't go aggressively for it. So in other words, somebody might see an opportunity to make $100 and would feel happy if they make 10. If we see an opportunity to make $100, we want to make $100, right? And if we can find a way to make it 110, we make 110, right?
Right.
Because those opportunities don't come every day.
Right.
You know, so I think one of the best things that we've done in our business is Mayberry was the only broker-dealer or financial institution that carried equities, material amount of equities, on its own balance sheet.
Yes.
And one of the things that we saw, especially when I came in 2005, when the market pulled back, it impacted the results. And companies can lose money as long as you don't lose liquidity. You can lose money today and make it back tomorrow, but if you lose liquidity, it's a problem. And there's a perception that if you lose money, then ultimately you could lose liquidity, yeah? And so when we went through that period, and you know, the more sophisticated investor, which is mainly our customers, realized that, hey, as you would call it, unrealized gains, we recognize that as we build a business, some people might not be able to make that differential. So what we did, we created a subsidiary, which is now called Mayberry Jamaican Equities. And we put all of our equities into that business.
Into that company.
Into that company. So you can see it more like a closed-end fund. So what it allowed us to do is to use our expertise to grow that business in terms of how we see the market. And we've been able to do that. But at the same time, if something comes along which you did not expect, like COVID,
yes,
you know, it would not become an issue for your regulated entity. You understand? Because you have finite capital there, it's closed then, so it does not bleed into your regulator entity.
And with that said, how do you really define the Mayberry investing style? I mean, is it activist? Is it passive? Is it midway? How do you define
it's all of them.
Investment culture?
It's all of them. So, you know, you're going to look at a Supreme Ventures. Initially, it was just an investment banking play to assist a customer to execute a transaction. So it became activist, and you know, with a group of people. And then it has now morphed into, as I said, I'm now the executive director, you know, given certain circumstances. So you've moved from just trying to put together a funding mechanism to ultimately now you're now driving strategically the business simply because that is what is called upon. And I think that, for example, shows the depth and breadth of Mayberry in that on our own, we can find you the equity, we can find you the debt, we can find you a team to put it together, we can put in a corporate governance, and if needs be.
And you can evolve very quickly.
Yes, and if needs be, we can run the business for you.
A great last point, because that's kind of a new offering or a new strategy or something that is now kind of evolving recently.
You see it as a strategy, but it's something that has always been there.
Being available.
You know, it's always been available. So,
but it's when the market is right and
and I mean when it calls for it, because in terms of the expansion activities that's required for an SVL, which I think is one of the most exciting companies right now.
And you have the C-suite team available. Which maybe a lot of competitors don't have that.
But again, that is within your control.
Right.
You know, and that's one of the things we do well at Mayberry in terms of talent management, also finding talent. You have pointed out that people keep taking my people, so I have to keep finding new people and replacing them, and we've done well at that, you know. And so that rolls up into, you know, good coaching from the top level coming on, from Chris, myself going right down.
You said earlier, like, you know, when Mayberry started taking these associate stakes or near associate stakes aggressively in the market, you know, like CPJ, you know, SVL or more, let's say, Derrimon, Iron Rock, or so forth. And now you're seeing so many investment companies just start up. Everybody, you know, gets into private equity. You know, nowadays you go to lunch and somebody just says, hey, they're in private equity. It's just become the buzzword everywhere. And, you know, dry powders and everybody's document. And, you know, you just don't know what you're reading. It could be bleach or anything.
There you go.
So I guess the question is really, how did you guys get there so early to just recognize that the alternative space or, you know, this space was going to be so important with the economic conditions? I
think for us, for a very long time, a lot of our competitors didn't really understand or appreciate equity. And so for a very long time, Mayberry has either been the number one or number two dealer in whether value of shares traded, volume, number of shares, etc. So to do that, we spend a lot of time trying to understand different types and forms of businesses. As I've indicated to you, and you know, we also have a fixed income market, fixed income business where we earn net interest income, etc. So I think similar to a lot of our competition, we picked up pretty early that interest rates in Jamaica were going to be on a downward trend. And we also realized that bigger was going to be better because it's going to be a consolidation. It's going to and the larger institutions are
Consolidation in these, like whether it's food sector,
correct. Not just that on that side, but I'm explaining what is happening in my industry as well as what's going to happen outside of my industry. So when we looked on and we realized that, you know, I mean, if you remember, Mark, the net interest income game, you used to have 10 and 15% spreads, you know, and we saw it come down to 2, 3, half, you know, and the question is how big would you have to grow your portfolio to compensate for that reduction in spread? And when we imagined it, we realized you'd get to a point where you're going to take on a level of risk that we would not be comfortable with. So we then decided that, you know, how else can you make this kind of money? And so when you started to analyze outside of the industry and you saw what was happening, because you had a lot of companies that were over-leveraged and needed equity, needed corporate governance, needed guidance, and how you can, once you put all of these together, it would create a result that drives significant value. We said, you know, if we could do that, then, you know, we're going to make a ton load of money.
After the races.
After the races. And that's what happened. It started with Access. When we invested in Access, it was a $38 million play. They were making $7 million. When we sold, they were about making $300 million. We made about $900 on the deal.
In hindsight, is that the greatest, call it investment, the greatest return you've had in the portfolio from investment to exit?
No, sir.
Okay.
We've had several. And again, the thing is that, you know, a lot of what we do and a lot of our success is private equity based. And a lot of my private equity deals I can't comment on.
Are private?
They're private,
yes.
You know. But we have had several others. We have been involved in other deals that have given us significantly more return with significantly less risk. And even after Access, one of the things we found is that in building it, we're spending so much time, you know. And then it was like a blessing in disguise when we sold the position, because we ended up investing in 4 or 5 different businesses that within a year of the investment, the value doubled.
Right.
You know?
Without spending as much time.
Without spending as much time. And so what ended up happening is that our private equity business doubled. I was spending more time at Mayberry, looking at growing Mayberry's business. The same was true of Chris. And it made sense.
How do you, with Mayberry being in so much demand and you've had your successes, how do you manage your time now?
Oh, God. That's an ever-evolving discussion, and depending on who is in the room, 90% of the time I win the argument, you know, as long as my wife and my son is not there. But the reality is that balancing is very important, and the problem is that I have very, very good relationships. And so when I'm around them, it's difficult to leave. So when I'm with my son, I don't want to leave his presence, you know. And the same goes for most of my other relationships, and the biggest of which is work, you know. So trying to balance all of those has always been a challenge for me, especially when I've always been a hands-on person from my trading days, etc. So it has been very difficult to find that time. And the most interesting story I'll tell you about that is that the day I finally found the time was when I became executive chairman of Supreme. Because I'm effectively the CEO of SVL, the CEO of Mayberry, 2 multi-billion-dollar businesses. And I've now found that I have had more time on my hands than when I was just at Mayberry.
And is that from just, you know, you've just got better at the art of delegating it, stronger talent teams? I think I've accepted that I'm getting older, and I think because of that, it's a very serious thing, and it's amazing how mental retardation is a hell of a thing. But accepting that finally, that you can't drink as much,
You can't burn the candle at both ends and in the middle and still wake up at 5 in the morning and start again. That finally forced me into realizing that getting good people around you is the way to go.
You find you're more focused now, actually, than when you were younger, or even a couple of years ago?
No, well, I don't know. It depends on what we're focused on, but you know. But what I find now, I am actually now a proponent, and I'll always give credit to Wayne Raker. He's the one that got me in his damn human psychology thing.
The kind of yoga guy, karma guy.
Yeah, trying to understand people and stuff. And I have found that thing has created so much value for me because I spend most of my time now coaching people, and I get joy out of coaching them. And it's very pleasing to see people learning something and then putting it into practice and then creating wealth and becoming better at what they do. And then the best part about it is that when you encapsulate it in an overall organization and seeing the organization grow, you know, you're like, what's next?
Yeah.
You know? So, I mean, that part of it, as I said, it took time, but I think I'm getting there. So I no longer get the joy I would once get by saying, if I don't write it, if I didn't do that trade, you don't feel fulfilled.
Right.
You know, so I am more along the thing where when I look and I see all the KPIs are green, you know, and there are a couple of people up, that's where I'm now getting my pleasure from. And it's been a time. And I said, it allows me to come and do things like this.
You feel prosperous. Yeah.
I don't know about the prosperity part of it, but I mean...
We're going to come right back to that. And we take another break at Business Live Extra. We'll talk about preparing for the future with Mayberry Investments CEO Gary Peart in just a moment. Welcome back to Business Live Extra. We're talking to Gary Peart, CEO of Mayberry Investments. Jamaica's economy, like the rest of the world, is being hit hard due to the pandemic. After 20 consecutive quarters of growth, the economy stalled before coronavirus hit in the fourth quarter of 2019. Now with shutdowns and slowdowns taking a toll, it has contracted 2.3% in 2020. Let's hear Gary Peart's expectations for the rest of the year. Gary, you know, we know you got a crystal ball, as they say in the financial sector.
I hear you.
But what's you know, we know what Mayberry is invested in. You know, especially through Mayberry Jamaican Equities. But you know, walk us through what is Mayberry, you know, bullish on for the rest of this year or even next year? Is there anything new, or is it just Jamaica listed equities?
Well, we see a lot of opportunities. And so in terms of one of our latest investments is in a company called EduFocal. Gordon Swaby is the entrepreneur there, young man full of energy. And that's about online teaching. And I think that's something that if we execute that properly, it will help to, I mean, revolutionize how we deliver teaching in the classroom, you know. I think the biggest challenge and the biggest opportunity for the country is digitization. It's happening across the world. It is happening here in Jamaica. It can happen faster. But the challenge I see is that I find a lot of Jamaicans are worried about change, and as such, they fight to keep what they have.
The pushback and the resistance.
And the resistance, even though it is similar to a car that's running off a cliff. You know, you've seen evidence that it's not going to work. So it is better you come out of the car and start walking in the next direction, hoping that something will pick you up along the way. And in simple terms, what it means is that there are always different ways to do things. And, you know, one of the things that is actually, I'm now putting in effect at SVL and Mayberry, you know, we've been looking at statistics, and statistics suggest that coming out of a recession, only 18% of companies actually do better. A similar amount don't make it out, and the balance never usually get back to where they were before the recession. And you know, the main reason, the common theme is that those companies reimagine or repurpose themselves with the same skill set. You know, so COVID was good and bad. COVID showed you what didn't work, and COVID is also showing you the opportunities to do better. You know. And so that's where our energies.
So with that said, with Edufocal, is it the sector, the entrepreneur?
It's both.
What really, so it's education
Yeah.
that excites you about it?
Yeah. So, I mean, again, it's an area where there are very few investments that gives you a win-win-win scenario. So we invest with management that want to move further, don't have the capital. And, so when you have a live wire like Gordon, you just really need to point him in the right direction and let him go. And then you put around him that whole governance to make sure that you don't go overboard and stuff. And then obviously there's the capital that we put there.
Is there a theme there emerging that the opportunities might not be at today's prices in the listed equities, but there might be more Edufocals out there like private companies that need capital now?
Yeah, well, I mean there's a combination. So for example, in terms of Mayberry, we actually ran a simulation when there was talk about locking down the country. We ran a simulation one Friday where no customers were allowed to come to Mayberry and no employees were allowed to come to Mayberry. And we ran the business that day with nobody at 1.5 Oxford Road. And we completed every transaction, including sending out money, receiving money, and balanced and reconciled on that day. And nobody was in the office. So we're now saying, so why does a customer have to come to the office?
So you did even your meetings, I mean, aside advertise, you did everything virtually.
It was virtual, nobody was there. So, the question is why do they need to be there?
And are those things, realistically stuff that you are looking at or not sure?
We did it.
Okay.
We did it as a test when it was the expectation, and the question is, and that's the beauty about Mayberry. We are brazen enough
to look at
that and say, okay, fine. As I said, why does a customer need to come?
You're not resistant to change.
Definitely not.
Yeah.
Definitely not. I mean, I can pay you. You call me, I transfer your funds. You want to invest with me, you transfer your funds to me, and we have a discussion about what to do with it. Why do you need to be in my office?
And how do you feel about the Jamaica stock market now? Just based on the June quarter expected to have quite a bit of results being off, some losses.
I think the majority of businesses are likely to show reduced earnings. I mean, that should be expected. If you're not in food, I don't think you probably would have done well. I mean, obviously, if you're in sanitizing, you're going to do very, very well. But I think on the balance, you're going to see a lot of red ink for that period. But I think the proof of the pudding is really September going into December. You have some companies, and again, I'm getting back to the whole SVL argument, etc. That's another listed company that, I mean, for obvious reasons, you're very excited about, as we transform that business. So there's going to be multiple opportunities there. In addition to its score.
Do you see, when you mention SVL, do you see it sticking to gaming 100%, or you might diversify into some non-gaming sectors?
Well,
just based on your changes, the corporate structure.
The thing about it is that there are many different definitions of gaming. So a lot of people think SVL is just the lottery. So SVL actually is the only company of its type in the gaming world. There's no other company in the world that has lottery, sports betting, VLTs, a horse racing thing, online. So we have the whole gamut, which is called gaming. In addition to which, and some people are not aware, we're actually now the leading phone top-up business in the country.
Okay.
And we're also the only company that sells top-up at the right price.
So you're like a gaming conglomerate.
Yeah.
Essentially.
Yeah. So there's a lot of excitement there.
But is there a possibility with the cash windfall that you have, could you be going into, I don't know, real estate? Could you be going into financial services? Could you look at other opportunities?
There are several other opportunities we have, and for obvious reasons, I can't get into them
disclose them today.
But I think right now SVL is probably one of the most exciting companies on the exchange.
And how do you feel about the real estate market? I mean, does Mayberry dabble in any real estate, or are you focused on equity?
Mayberry has several tracts of real estate. We have a partnership. We currently own the largest undeveloped piece of land in Kingston.
You do? Okay.
We're going on the road of developing that. We have some BPO customers
Is
and
that
stuff.
commercial or
It's commercial.
residential?
It's
Okay,
commercial. You know, so we have that. We have some stuff on the North Coast that we'd spoken about and stuff. So, but again, we're very, very disciplined in the sense that we've had them, we've kept them, there's gains on them, but until we crystallize
You feel
and
comfortable
monetize, right,
going, okay.
we'll go down there. So, in terms of the real estate, I think there are going to be price pressures, you know, because a lot of people were buying a lot of these investments for Airbnb. But the feedback I'm getting is that there's still a strong demand from the diaspora. You know, there are people who are buying 3, 4 at a time, 400,000 or 500,000 pounds. You know, so there are going to be segments. The challenge I see in real estate is the same example I gave about Mayberry, and nobody was at Mayberry. A lot of companies now with work from home, I think you're going to have a lot of excess office space. You know, you cannot have a situation where you go through COVID and realize that 40 to 60% of your staff don't need to be at your office. And then you're going to go back to that.
Especially persons with leased offices.
Yeah, your savings are going to be tremendous.
And what's really the toughest play in your portfolio now? I mean, what's giving you a little bit of a headache and or taking up most of your time? You know, when you look at your concentrations in your Mayberry Jamaican equities.
Well, you know, none really, in the sense that as you said, we have cash, so there is no need to sell, so it's not a concern. I think we hold shares in companies who are going to do very well. And so we're not a host that is buying and selling major positions over a 3-month period.
Right.
We're normally 5 to 10 years. We might change our portfolio.
Do you look, Gary, like at this point now that you have multiple interests, you have some significant interests.
Yes.
Does Mayberry look to even maybe join up some of those or consolidate some of those, together, for the greater good?
Mayberry is about creating value. So whatever is required to create value, we'll always make those calls. So those opportunities can arise. And as I said, it tells you about the beauty and the strength of Mayberry, because then you can have a position in MJE, but then you support that with an investment banking arm over in Mayberry to bring like your suggestion to life.
Right. So it's almost like you can source, you have your clients in the dealer, and then you got your principal.
Correct.
At MJE.
Correct.
That's great.
So it allows us a lot of opportunities. The long and short of it, I mean, I've been skipping around part of the thing because, the marketing says I mustn't talk about the position until it has been finalized, But Mayberry has always been high on Jamaica.
Yes.
I mean, the amount of money that we've poured into the Jamaica Stock Exchange at a time, we did it 4 or 5 years ago when people thought we're crazy.
And you see it with your units or your shares, you have it in your documents, your net bio.
And we still believe in Jamaica. And I think we're gonna come back out of this, probably not as fast as some people think, but better than some people think. Because I remember one of the first corporate finance deals I was doing back in the day, £150 ago, right? It's
a market share that you've put on.
There you go. It's rough. You don't look in Asian, you look in pounds, but. I remember the transaction. It was funding a particular tourist entity. And the person came and wanted to do a syndication. I'm like, when I looked at the numbers, I'm like, this thing is so great. Why would you want to share this?
Yes.
It's about, risk metrics, because anything could happen. I'm like, but based on your metrics, you assume that the Jamaica tourist product will be shut down for 3 months. That's blasphemy. That could never, ever happen.
Yeah.
And I remember that conversation, obviously, in the middle of April at my house. I'm like, who would ever believe that the Jamaica tourism product could just be shut, right? And when we look at it, and I had a discussion with some of our key clients, and I said, listen, if there's one thing I can tell you about diversification, it's COVID.
Yes.
Because once you accept the philosophy of diversification, COVID can come a second or a third time, you will be fine.
Fine.
Because you'd have cash somewhere
And
waiting to take advantage of this thing or just to bide you through.
yeah. No, Gary, it's great having you on Business Live Extra.
Thank you for having me.
You know, Gary, you're bullish on Jamaica, and you even have, you know, Jamaica colors, the Jamaica map in the Mayberry documents at times. Which
There you
really
go.
like, and your annual report. That's it for another edition of Business Live Extra. Remember, business has only two functions: marketing and